Welcome back to the Real Estate Huddle. This is episode 127, and today we are going to give you an exclusive look behind the scenes of a real estate transaction. And you may think that realtors, once the deal is under contract, the deal terms come together, that the realtor just coasts and goes on vacation and then shows up to closing. But that's not what actually happens. There's actually a lot of work that happens behind the scenes. So we're going to highlight that just in case you're interested in more of the real estate business and what that's all about. Or you're a potential buyer or seller and you want to know like what's actually happening behind the scenes. This video will be very interesting for you. And so here's something that many people just do not realize, you guys, that once the contract is signed, there are dozens of moving parts that have to come together perfectly in order for this to actually happen and for it to be a successful closing. Just one missed deadline or a financing issue or an inspection surprise, an insurance surprise, and all of a sudden the deal goes south and it terminates. And so that's important for us to be, making sure we're at our best during those times and making sure we're representing people correctly.
And if it's done right, it is an easy, smooth transaction.
Yeah.
You don't see all of this stuff and
Right.
that stress doesn't come to you.
Yep, exactly. So those of you that have been through a real estate transaction, if you haven't heard of any of these things, that's probably a good thing. Your agent was doing a good job. So the contract is signed. Now what? What happens after that, you guys? First steps.
Pop the champagne. We're under contract. We're good. So, yeah.
Send out the emoji sticker. we got it done.
Here we go.
Yep.
So that's kind of the first step in the commitment, right? Signing the contract, everybody signed. That's your first commitment. Now, probably the first step in the deadline there is earnest money.
What is earnest money?
It's a good question. It's something that it's like a good faith down payment or deposit that you would put into an escrow account, typically with the seller's title company. Normally, it can go in other places, but most of the cases it goes to a title company and they will give you a receipt for it. Make sure you get that. But what that is basically prepaying your down payment. That's your financial commitment to saying, I'm in this transaction. So could if you terminate a contract based on the actual deadlines and the dates and legally, you're entitled for that money back. But if they have an ability to protest it, it happens like 1% of the time. Mm-hmm. But that is something that you put that money at risk. So it shows your commitment to it.
Keeps you earnest and honest in the transaction.
There you go.
Like Ernest Saves Christmas, right? Just like that. I used to watch those movies all the time.
There's a good money.
Ernest goes to jail. Do you even know what I'm talking about, Gabby? You're probably too young for this.
Okay. Well.
Jesse does.
Jesse's on it.
Ernest saves Halloween. I was basically Ernest saved everything back then. This guy named Ernest P. Worrell that wore overalls and just like saved the day. But
good for him.
Yeah. Go look that up sometime. Your dad will tell you about it.
Yeah.
But earnest money is crucial to keep a buyer honest and respecting deadlines in a contract. So that's big. And then the timeline actually begins, right? Once the home goes under contract, deadlines are established. We got lending process that starts and gets off the ground.
Yeah, so I like to put this in a calendar view, right? So most closings on average are 30 days, mm-hmm. right? So you're going to take a whole month. Earnest money is due 3 days after having business days after having a contract signed, typically, mm-hmm. is what you require there. So then the other things in the calendar start to tip. So it's just as you're going from left to right in the transaction, there's certain positions that line up. What do you got next?
Behind the scenes, the buyer's starting the loan process, right? Loan application, making sure they're already pre-approved before they write the contract, but now the loan application begins where they're actually like applying this house to the loan and locking in an interest rate typically. A lender may say, let's wait and float it down a little bit and then we'll do it later if rates go down. But most of the time they're getting the loan process going. We have deadlines for HOA documents. So we have to make sure that the title company gets everything they need to get the HOA documents so that we have all the covenants, restrictions, everything that's needed during the real estate process so buyers can know all the rules in the community.
Yep. So typically with the lending process, once you have an address that is being applied to the loan, mm-hmm. that starts the next dominoes of that. You can be pre-approved and all your finances done, but you have to add the address. So,
yep.
And then that starts off some of that process. So
gives it like a case number, basically, to
yep.
start it off.
So now you've got all of the lending stuff that has to happen, but then as you were alluding to, you've got what I consider the due diligence side of things, right?
Yep.
So it's a little bit more prevalent in the commercial world, but in the residential side, you got to do due diligence with HOAs. You've got
Title work.
Title work to get done. You've also got
Meaning, like, a lot of people don't understand what title work is because they think of like title on a car. So if you've never bought a house, like title work is like the chain of ownership history on the property. So you want to make sure that there's no like not dumb things. It happens sometimes, right? Where you have like the IRS, you're back on your taxes, and now there's an IRS lien on the property that might need to be cleared off the property. There could be judgment for something, right?
or a handyman lien or anything.
Yeah,
like that.
mechanical lien from a contractor or something.
So if you're doing like a car purchase and there is a lien on the car, you actually can't get clean and clear title to that car until that lien is settled. Same thing with the house, but it just has a lot more layers to it.
Yep.
So, and that goes back, typically houses last longer than cars, so it goes back a lot further. So.
Yep. Absolutely. And then after you're under contract, we've got the title HOA stuff started. Then comes probably the biggest stage and the biggest fall in most contracts is the inspection. So this is an important step in the transaction where the buyer is going to look into the home inside and out, right? And hire a professional inspector. 95% of the time, the buyers are doing that, and then they're having additional tests done. So that inspector is going to go through all the systems of the house, also look at radon, sewer scope, maybe even have a roofer come over, maybe even have a solar inspection, maybe have a well test or inspection if there's a well on the property, septic. There's all kinds of different types of tests. You could test for asbestos, you could test for mold. All kinds of things, right? To make sure that the property's in good shape. You do a meth test. You think there's meth that's been cooked in there?
Yeah. Heisenberg was cooking in the kitchen.
I actually get that now. I've been watching it. That's great.
You're growing up so fast. I love it.
So I got tired of people asking me, "Have you seen Breaking Bad?" Have you seen it? So finally, I'm like, "Okay, I'm gonna watch it."
Heisenberg, it is.
So yeah, like if you smell brown sugar, do a meth test. If you or burnt cookies, whatever it is, and also like you start to negotiate for those things, right? So if you, based on the findings, you would ask the seller to fix certain things. If they're not willing to fix things, maybe they're willing to fix part of it, but not all of it. They'll come back with a resolution, and that resolution will say what they're willing to do. And then you have the right as a buyer to counter back on that, or accept it and just move forward, or terminate.
And one key thing in this is in doing this, I've seen other people's inspection reports come back, and they're like 28 pages, and they're like, yeah, the water works, and the water was hot. And I'm like, that's not really good testing. Like that was not, they didn't really get into the details. So we use, we not partner with them, but we primarily refer these folks, some folks that are really good and go into great detail. Now, they're telling you that your child is ugly. They're telling you that, with 189 pages, that here's everything and every detail that's wrong with this house. But the key thing is that allows us to negotiate. When you see a 189 page report or 200 page report, whatever it may be, that's got tons of detail on it and all these flaws and defects in the property, and then you ask for a handful of these things to get fixed, it gives you a lot more leverage. Now, if you get a 28 page report that just says the water ran, but they didn't find the mold or the water leak or anything else, you don't have a lot of leverage to be like, hey, this is actually a bigger deal. So it is an emotional low in, so preparing folks for that. It's really hard to hear that your child's ugly. Yeah. But the good news is there's a strategy behind that and trying to get all of the defects identified ahead of time. So
yeah. So preparing people's expectations is probably one of our biggest jobs, to help them understand what's coming and what to expect. Because you don't want to be surprised if you're a new buyer going through this process, right?
And I always clarify too, like some of the small things are things that you would find in every home, things that you would find in your home that you live in right now. But they're, like Brock said, trained to find every little thing, which works in our favor in the end. So
I literally spent 4 hours in a new build this week, putting tape on the walls for every little minor defect here and there. And my clients were like, oh, well, we don't really care about that. And I'm like, okay, but it's still wrong. So like, let's see what they'll do. And they're like, oh, you got a good eye for this. I'm like, yeah, well, this is your chance to make it right now. And even in a new house, there's still going to be problems with it. Mm-hmm. So you can only imagine having a 100-year-old home. There's just going to be a laundry list of things. So nothing's perfect. So.
Yep. Awesome. And then we get to the loan and underwriting process.
So for the loan and underwriting process, some of the steps are getting your loan application finalized, then the buyer submits their financial documents, and then you go to the underwriting review, and then the conditional loan approval, and then the appraisal is ordered. And usually a lender will send you like updates every time they do a step, or they have some automatic system or something so that you know what's going on.
Yep. The good ones will. Yeah, for
Yeah.
sure. Which is nice. And yeah, like each of those steps is important. Like this is a very real thing, right? Like lenders are looking at the buyer's income compared to their debts. If they have too much debt or not enough income, it's not going to go through. Or if, say, their income initially looked good, but then now upon underwritten approval, they've found out that there's a few conditions for their income to be seasoned, and say like they haven't been on their job long enough, or we need a couple more pay stubs to be able to verify this income. Those kind of things can create some lending delays or complications that could lead to termination or extensions in the contract. So that lending phase is pretty important. And the lending deadline, the loan availability deadline is what it's called in the contract. Like that we put out about a week before the closing date, just to make sure that we give our buyers time to get all their loan docs through and for underwriting to see it and kick it back out so that we know that they're good to go.
Yeah, so any red flags are identified early enough to where it doesn't put their earnest money into jeopardy. So typically 3 weeks into a 4-week process roughly. So,
and we call that cleared to close, when they're all like done, which is a happy day. That's when the buyer can rest at ease knowing they're going to get the financing and nothing's going to go south at that point. So that's pretty awesome. And the appraisal can be another huge, conundrum in itself, right? If it comes in low, then there's trouble. Then we got to negotiate. And lenders order the appraisal. They're the ones that order that from a random pool of appraisers. So you can't just pick your guy that's going to give you the best value on the property. It has to be randomized. And so they order from a random appraisal pool that they have at their company. That appraiser goes out, looks at the property in person typically, and then writes a report on it saying what they think the value is. Meanwhile, they are looking at the contract. So oftentimes, 90% of the time, it comes back right at value. There are times, though, where it can come in above value, which that's like instant equity for the buyer if it does, right? It's pretty awesome. It doesn't really affect their loan, but it feels good to know that someone thinks your home's worth more than you paid for it.
It can affect their loan if the appraisal comes in much higher and they have PMI.
Yeah.
Right. You can tip them past that point where their loan to value ratio changes. So we've been very fortunate where I've been able to negotiate a low enough price to where there's margin there. So I had one buyer walked out of closing with a check, and I'm like, sorry, I disappointed you. You didn't want to have any money down, but now you got paid to leave. So
got paid to buy a house.
Yep.
That's awesome. Yeah. You've had quite a few of those actually this year. It's been great. So if it comes in low, this is where we have problems, right? So if that happens, then we have a whole new set of negotiations. Let's say we're like $20,000 low on the appraisal compared to the purchase price. In that case, the lender's not going to lend on more than, so if it's like a 90% loan, then they're not going to lend on more than 90% of the appraised price, not the purchase price. And so we'd have a $20,000 gap there where the buyer would have to bring 20 grand more in cash to the table to close this deal. And sometimes that's possible for buyers, and other times it is not possible for buyers to do that. And so in those cases where it's not possible, you've got to get that seller to come down in value. And so oftentimes they're asked to correct their price to get there so that the deal can still close. And some sellers will be like, no, it's not worth 20 grand to me. I'll start over. We'll get the next buyer. And hopefully that appraisal will come in better. Yep. But FHA appraisals, they last for 6 months.
They're glitter for 6 months.
They're locked. Conventional, you can get a new appraisal the next day, and that's no problem. And so it depends on the loan type to know how much flexibility you're going to have, but that's kind of how it works as far as appraisals go.
Yeah, one thing that people don't see behind the scenes, if that appraisal comes in not in the buyer's favor, that could mean multiple hours of going through comps, talking with people, evaluating the comps, protesting the appraisal, going through all these different layers. So if that does happen, that's a significant amount of time and effort to go in there just for a small dollar amount.
Yep.
So,
yep.
Or any dollar amount, I should say.
Yeah. And once that's all approved, if the appraisal's good, or if you've renegotiated a price and you're ready to move forward, then we get to basically preparing for closing and getting ready for that. And so the title company's done all their due diligence, on the property and the ownership history. They provide title insurance that the seller pays for in Colorado to the buyer. And they also, the seller will allow the buyer to do a final walkthrough right before closing, which is huge. And we've got one today, right after this, actually.
Yeah.
So going to go to that and go see the walkthrough.
And part of the thing that's happening at a final walkthrough. So as a buyer, you're looking, did they put any holes in the wall when they were doing this and moving out and that type of stuff? But for us, we've seen all the inspection paperwork. We've seen, we have what they said they would do. Then they had the paperwork saying that it was done. But a lot of times I'm going there and validating that. So yes, this plumbing or this part of the plumbing had a leak, but when I went there, it was still leaking.
Yeah.
So I'm getting in contact with other people, getting the plumber back out there, getting that mitigated, taken care of, and then confirming that it's done. So you're not buying a house with a water leak.
That's why it's important too, I think, in the inspection to clarify, like, have a licensed professional complete plumbing or whatever it may be, because they could fix it, but not in the way that your buyer wanted.
Yep.
And then they show up the final walkthrough and they're like, what the heck, Yep. So
Yeah, totally. Yeah. And it's often, it's usually the hour before closing that we do the final walkthrough, just so that you can see the property right before it changes hands. And people want to know, because what if you saw it the night before and then there's a leak that happens the next morning? You miss it, you sign docs. That property's yours now, right? It's recorded in your name.
If there's a lot of stuff on the inspection, I'll typically go beforehand, especially if the property is vacant. I'll go confirm that all this stuff was done. And then the final walkthrough is just that validation for everybody.
Yep, absolutely. So that's kind of just the moments before closing. And then we always tell our buyers, make sure to bring your ID, your driver's license,
Yes.
and make sure to bring your just your funds. If you have to bring either a cashier's check or a wire. Most of the time, title companies like wires nowadays. And so you got to have your money there, unless you're getting money back at closing. That could work. But that's important to be prepared and know what to bring to the closing table. And I actually had a seller one time that showed up without any documentation, and he was about 84 years old. And he shows up, and I said, Don, you don't have a driver's license? Like, how'd you get here? He's like, oh, I didn't know I needed a driver's license, only if I was breaking the law. And so he's like, I drove here. So he literally thought he only needed a license if he was going to break the law. But since he kept all the rules, he was fine. And so anyways, he's kind of a funny guy. I asked him every time I'd call him and say, how you doing, Don? He would always say, oh, not too many. And I always scratch my head. I don't think that's the right answer to that question.
But it's a Don answer. So.
He was great, but very coherent sound. He was a goofball. He liked to play with the rules and just be different. He was so funny. And his wife couldn't have been sweeter. Like, she was always just by the book, but he was a wild card. So anyways, you have all kinds of type of people that you're working with. You hope they have ID when they show up to closing, because it's important to prove that you are who you say you are when you're either buying or selling a house. That's pretty important. And so the closing process takes about an hour for a buyer, about a half hour for a seller. It takes longer for a buyer because
Loans.
Yeah, you got a lot of loan docs.
Loan docs.
Those lenders want your signature 40 different times to say that if you don't pay, you can't stay. There's a lot of ways to say that.
Hold on, you have to pay the loan off?
You have to pay the mortgage payment.
You have to pay the mortgage payment to live in the property.
You have to pay, to live there.
I want to know the people that didn't get that memo and created a lawsuit, because every form that I see, I'm like, why?
I know. So they've covered themselves now. You will seriously sign about 45 different loan docs while you're sitting there, plus the real estate docs, which is another 10 to 15 signatures. So you'll sign your name 55, 60 times.
Yeah, inch and a half thick piece of paperwork, and
Yep.
you'll do that. One of the other things that's happening behind the scenes is the TD 1000 real estate, real property value form. So we can go into, we counsel our buyers on how to fill that out based on our meeting with the Douglas County assessor and what to do with that paperwork. So it can impact your taxes. So another thing that we're doing, going through and assessing, okay, what are the appliance packages worth? What are the blinds worth? And then giving you dollar values to fill that out.
Yep.
So
definitely. Yeah. You don't want to brag to the tax assessor and tell them how awesome your house is.
No.
It's the time to just be humble about it.
Yeah. Very low key. Fair.
It's okay.
Check that box.
So after that's done, we've signed all the docs on both sides. Nowadays, ever since COVID, we've done split closing. So buyer will sign in one room, seller will typically sign at a different time in another room. And once they're both done, Title company will bring the whole package together, send it off to the lender, make sure it's all approved. Once the lender says, yep, we're good, then the title company goes and records that transaction with the county so that it changes hands of ownership. And then we are a table funding state in Colorado. Some states are escrow states. So a lot of people listening may be from an escrow state where they fund the next day. They sign the docs on the table and then the next day it funds. We are a table funding state. We fund at the table, which is kind of cool. There's not too many table funding states out there.
There's not a briefcase of money there. It's just imaginary and wires and numbers. But
yeah, it's all just make believe.
Yeah, Don's brother did bring a briefcase in once, but we'll tell you about that story later. So.
No, but you know what I did with Don that day? I went to the DMV with Don.
Did you really?
Yes, I got him a driver's license. For real. I took him because he couldn't drive to the DMV and sat there with him for like 2 hours so that he could get his driver's license.
That's amazing.
And it was a process, let me tell you. So
your government working well.
But they were going to give him $450,000 for his house. So the title rep's like, I can't do that unless you have an actual ID. Like you have to have valid ID. And so
I guess we'll go do that.
Yeah. So real estate agents do a lot of things, right? Sometimes we're marriage counselors. Sometimes we're therapists. Sometimes we get to be negotiators and marketers, which is actually what we're hired to do.
Sometimes we're security guards going into weird properties. So.
Yeah. Or at open houses.
Yeah.
Whoa, you stay here. Hold on. You guys can't spread out this much. Like we get to be a lot of different things and wear a lot of hats in this business, but it's a great life. It's a great business. We're grateful for it. And, that's really it. Once that deed is recorded, then the ownership changes, right? And then for us, it's all about the fun part, which is following up and keeping in touch with our clients and making sure that we continue to build a great relationship with them. And for some agents, it's like a funeral at the closing because they never see each other again. For us, it's like the start of something, right? We just work together and now we get to be friends, right? And continue to follow up, invite them to our client events and parties that we do and have fun with them. And we're doing our March Madness bracket right now. So if you want to be involved with that, if you're listening, definitely let us know.
I'm fighting for the massage, so solely fighting for last place.
Yeah. We have a last place prize and first place prize.
That takes the pressure off. It's really nice.
Yes, it's gonna be fun. So, if you need guidance and you need someone that can help you through each stage of the real estate transaction here in the Denver metro area, we are more than happy to help. We've been through over 1,000 transactions over our team's career so far, and so we'd love to help you navigate this real estate market and help you get a great deal on a home or defend your equity if you're the seller, and help you retain as much equity as you can since you work hard for that. And we hope you enjoyed this one, and we'll see you on our next podcast episode.